Welcome to Strategies on Breakout Trading using Binary Options. This topic is brought to you by binaryoptions.net.au. Price breakouts are considered powerful trade signals that often lead to strong moves in the market. A breakout occurs when an asset's price moves outside a predefined support or resistance level with increased volume. Long positions are signaled after the asset's price breaks above resistance, while a short position triggered after the asset's price breaks below support. Once price trades beyond the support or resistance barrier, volatility typically increases and price usually trends in the breakout's direction. When trading price breakouts, there are two main types: a continuation breakout and a reversal breakout. A continuation is a breakout pattern whereby, following a pause in a trend, also known as consolidation, which is characterized by a period of range-bound movement, price breaks out, resuming in the original trend direction. A reversal breakout pattern, on the other hand, occurs after consolidation when price breaks out in reverse of the current trend. Statistically, price breakouts from a continuation pattern ultimately generates a higher win ratio as opposed to reversal patterns, which have a higher probability of failure. When price consolidates prior to a breakout, various patterns will form on the price chart. Breakout patterns such as triangles, channels, and flags form valuable trading tools when seeking out a potential breakout trade, while other patterns including wedges, diagonals, flags, pennants, ranges, and even the very common consolidation, which can be applied to a breakout strategy with success. The head and shoulders pattern is one of the most famous and popular chart patterns known by traders. Considered a reversal pattern, when formed, signals an asset's price is likely to move against the current trend. Formed by a peak shoulder, followed by a higher peak head, and then another lower peak shoulder, the head and shoulders pattern is favored by traders as a result of its high probability setup because of the speed at which price falls off the second shoulder. Finally, a neckline is drawn by connecting the lowest points of the two troughs, representing a level of support which, once broken through by price, completes the head and shoulders formation. There are two versions of the head and shoulders pattern. The head and shoulders top is a signal that an asset price is set to fall once the pattern is complete, and is usually formed at the peak of an upward trend. The head and shoulders top is considered a bearish reversal chart pattern. The head and shoulders bottom, also known as inverse head and shoulders, signals that an asset's price is set to rise and usually forms during a downward trend. The head and shoulders bottom is considered a bullish reversal chart pattern. Because binary options traders are not concerned with how much an asset moves in price, only the direction, utilizing a head and shoulders pattern as a breakout strategy is considered to be effective in identifying short-term price movements for profitable high-frequency trading. To set up the price chart for a potential trade using any time frame and any asset, the head and shoulders pattern can either be drawn manually by the trader or overlaid by a charting package. Acting as a trigger signal, the neckline, which when drawing a head and shoulders top acts as a level of support, is plotted by connecting the lowest points of the two troughs. Typically, when price breaks out below the confirmation neckline, price falls rapidly on increasing volume. The break below the support level on high volume confirms a strong short-term sell signal. That is, that the trader anticipates that price will fall further and a short-term put trade will expire in the money. Conversely, the neckline, which when drawing a head and shoulders bottom acts as a level of resistance, is plotted by connecting the highest points of the two peaks. When price breaks out above the confirmation neckline, price rises rapidly, generally on increasing volume. To break above the resistance level on high volume confirms a strong short-term call buy signal. That is, the trader anticipates that price will rise further and a short-term call trade will expire in the money. For confirmation of a high probability head and shoulders top trade, the put sell signal is strengthened when supported with a downward sloping support neck line which confirms prices are making lower lows. Conversely, a head and shoulders bottom call buy trade is confirmed with an upward sloping resistance neck line signaling prices are making higher highs. For more information about this topic and more binary options trading strategies, please visit binaryoptions.net.au.